Today, New Zealand property, when a pig's ear really is a pig's ear. Well, again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Well, when the REINZ says we're operating in a different market to the one we saw last year, which was fueled by a sense of urgency as demand outweighed supply, and the market has moved the other way, and the scales have tipped so that supply outweighs demand. And in this market, while we still see a good rate of sales, they tend to be slower. Agents report the majority of vendors understand the need to adjust their price expectations. However, some are slow to meet by expectations. Well, then we know that things are pretty bad because, of course, we know that they will try and make a silk purse out of a pig's ear. The REINZ did say another factor impacting the national median price is a large number of sub-$1 million properties being sold. 11 of the 16 regions are showing an increase in the sale of properties in this price bracket. Two largest regions, Auckland and Wellington, are most significantly affected, with an additional 8.6% and 8.9% respectively of properties selling under $1 million this month compared to September 2021. But of course, you cannot keep the spruiking down for long. They say while spring has gotten off to a slower than expected start, agents are confident activity will pick up over the warmer months as people move to complete their plans to buy or sell ahead of the summer holidays. So, today REINZ released their data to the end of September, and they reported that across New Zealand, the median residential property price for New Zealand, excluding Auckland, decreased 0.7% from $720,000 to $715,000, and Auckland's median price decreased 8.3% compared to September last year, down from $1.14 million to $1.045 million. 6 of the region's 7 legacy territorial authorities had negative annual price movements. North Shore saw the greatest decrease, down 28.6%, followed by Papakura, which was down 16.9%. And looking at the breakdown of property price bands in the North Shore, there was a marked increase in the percentage of properties sold under the $1 million mark compared to the same time last year, which will have contributed to the decrease in median price. In Wellington, the median price was down 3.5% annually, from $850,000 to $820,000 in September. 7 of the 8 TAs in the region had negative annual median price movements. Moving from August to September, there was a 1.4% increase in the median price. However, 7 regions saw a monthly decrease, and the seasonally adjusted figures show a marginal 0.2% increase nationally, they said. Regionally, while the seasonally adjusted figures show some regions performed better than expected, others underperformed. Following an exceptional period of growth last year, spurred by government stimulus and closed borders, seeing Kiwis investing locally, the property market is moderating. Owner-occupiers remain a strong buyer pool, and agents in some areas do report seeing some first-time buyers in the market, enticed by easing prices and less competition. But property prices are still unaffordable to many, particularly in large hubs such as Auckland and Wellington, they said. Investors remain largely absent. New tax legislation and rising interest rates have created concerns about this buyer pool, seeing them step back. Overall, buyers remained cautious in September. Increasing interest rates, tighter lending criteria, and concerns around the cost of living continue to challenge the pace of the market. In the light of last week's OCR increase of 50 basis points, bringing it to 3.5%, with further increases expected, we expect sentiment to remain cautious despite a strong labour market. And they went on to say, agents also report seeing an increase in open home and auction attendance, which we would expect to see as we move into the warmer months. However, the September data and reports from agents indicate that the expected spring uplift is not as strong as anticipated. Now, across New Zealand, the number of residential property sales decreased annually by 10.9% from 5,548 in September 21 to 4,943 in September 2022. Month on month, there was a decrease of 1.5%. And further, Sydney adjusted figures showed a decrease of 2.4%, indicating September was a quieter month than usual. The sales count for New Zealand, excluding Auckland, decreased 20%, and there was a decrease in sales activity of 5.4%. Auckland, Gisborne and West Coast all saw annual increases in sales activity of 15.8%, 12.5% and 6.5% respectively, but September 21, of course, was accepted by COVID lockdowns, and the seasonally adjusted figures show more tempered results. Auckland performed marginally better than expected, up 0.7%, while Gisborne and West Coast underperformed against what we would have usually expected, down 5.5% and 18.3%. The REINZ House Price Index for New Zealand, which measures the changes in residential property values nationwide, showed an annual decrease of 8.1%, from 4,066 in September 21 to 3,738, down 12.6% from its peak in November 21. For New Zealand, excluding Auckland, the HPI decreased 6% annually, from 4,133 in September 21 to 3,887 in September 2022. In Auckland, the value decreased by 11.2%. Wellington's HPI dropped 17.3% compared to the same time last year, from 4,200 to 3,473. That's the third largest annual drop in HPI in all regions since records began. And Wellington has ranked bottom on the HPI annual movements for 10 consecutive months. Auckland had the second greatest decrease in HPI movement, with an annual decrease on the index of 11.2%, from 3,977 to 3,533. And the region has had the greatest drop in HPI movement over the past 3 months, down 4.6%, followed by Wellington, down 4.3%. The HPI results indicate that in many regions around the country, buyers are not paying as much as they were for the same type of property. For instance, what would have sold for slightly over $1 million last year might now sell just under $1 million this month. The effect is particularly pronounced in our two largest regions, Auckland and Wellington, they said. Across New Zealand, the median number of days to sell, the DTS, a property in September was 47, and that's up 10 days compared to September 21. And for New Zealand, excluding Auckland, DTS increased 12 days to 49. There has been a significant increase in the median days to sell over the past month as the market pace slowed. 10 of the 16 regions had a median DTS of 60 days or more in September, which, if you exclude lockdowns from May 2020, has not happened in a month since June 2012. And national listings were up 12% annually to 7,881, up 5.2% compared to August 2022. New Zealand, excluding Auckland, saw an annual decrease of 2.3%. 9 regions saw an increase in listings compared to September 21, and Auckland had the greatest increase in listings, up 56.8% compared to the lockdown-affected September 21. And of course, it's worth noting that Auckland was in lockdown level 4 for 3 weeks in September 2021, which was reflected in those numbers. 2 other regions saw increases in listings of more than 20%, Northland at 33.5% and West Coast at 51%. And at the end of September, the total number of properties available for sale across New Zealand was 25,903. That's an annual increase of 93.2%. from the 13,407 in September 2021. And for New Zealand, excluding Auckland, it was 15,744, an annual increase of 108.6% from 7,548. Stock volumes remain elevated. Properties are staying on the market longer. The median days to sell for New Zealand was 47 in September, they said. To date, we've seen people hit pause to wait for a more favourable market, whether buyers waiting for a deal or vendors reluctant to list in fear that they may be that deal. However, as we edge towards the close of the year, they said, we expect to see the usual uptick in activity over the warmer months as vendors motivated to sell this year bring their properties to market, granting buyers yet more choice. People will continue to make life decisions. Property is a long-term investment, and those who purchased 5, 10, 20 years ago will have made significant capital gains. Those owner-occupiers who are trading up or in will find themselves in a good position backed by equity. And finally, nationally, 11.9% of properties, or 586, were sold at auction in September, compared to 21.6% in 2021. New Zealand, excluding Auckland, saw 9.4% of properties sell by auction, compared to 18.7% the year prior. And auctions represented 25.9% of sales in Canterbury, down from 36.3% in September 21, and in Auckland, 16.8% of sales were by auction, just 275 compared to 30.1% at the same time last year. When you look at the percentage of sales by auction over time, there's been a significant decrease. Between March and May 2022, we saw the percentage of sales by auction go from 20% to 11%, reflecting the shift in market sentiment. And they went on to say auctions are unconditional. However, through 2022, there has been an increase in conditional sales, subject to sale, finance, or other, due to factors including tighter lending criteria, interest rates, and cost of living. And we've heard a heightened number of properties are passing in at auction. However, agents noted those properties tend to go to post-auction negotiations. That said, they remain a popular and effective sales method. For vendors, auctions bring serious bidders to the room and can result in a quicker cash sale, especially important for those upsizing, downsizing, or looking for a lifestyle change. For buyers, they are a transparent way to gauge the market value of a property, they said. They didn't add, of course, that if you actually use an auction mechanism, then the agent gets a chunk of extra money. And that, of course, is part of the reasons why auctions are still being spruiked. But the bottom line is this: availability of credit is the critical lever for prices going higher or lower. And of course, the Reserve Bank in New Zealand has lifted interest rates to 3.5%. Borrowing power has been reduced. Availability of credit is very, very tight. And that essentially means that prices will continue to fall. And given the fact that we expect to see more cash rate hikes in New Zealand in the months ahead, you've got to bet that home prices will continue to go further south. But of course, that doesn't stop the real estate sector from continuing to preach the gospel of property because, of course, that is their religion. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.